Now, the federal government of Nigeria's savings bond offering, which will include 2 bond series with competitive interest rates, will launch in October 2024, according to the Debt Management Office. The DMO website indicates that the subscription window will be open from October 7th to October 11th, 2024. The first series is a 2-year FGN savings bond due on October 16th with an interest rate of 17.084%. Now, the second is a 3-year savings bond with a 180.84% annual yield that matures on October 16, 2027. The stock exchange ended the day on a negative note, with the all-share index declining by 0.12% to close at 97,584.8 points, reversing the previous session's bullish trend, which had seen a 19 basis point gain. Market capitalization stood at $56.076 trillion, with a 719.1 million shares traded across 9,435 deals, total transaction value of $8.34 billion. Now, Busayo Inuojo is an investment research analyst at PSC Research Limited, who joins me now to discuss this further. Busayo, good morning to you.
Morning.
Thanks for joining the show. All right, let's begin with the NGX ASI closing on a negative note. What is currently driving the equities market?
Okay. I would like to provide more context, looking at what happened in the market in the month of September, which is just concluded month. So in the month of September, we saw a lot of corporate actions being released in the market. We saw the likes of the Tier 1 bank releasing their H1 result into the market. And as such, we saw the banking index actually driving the market. The market closed at 2.0% on a month-on-month basis in comparing the performance of September to August. So we saw the market capitalization strengthen to over 56 trillion naira. So coming into the month of October, we've seen a lot of profit taking, which is not unusual in the market. So for the market closing in the red yesterday, it's actually based on profit taking in the likes of some banking stocks, the likes of Zenith, Jitco, UBA. Also, we saw profit taking in Guinness, which is not a banking stock, as well as Owando. Like I said, it's not unusual because the equities market has actually been grappling with the tightening policy by the MPC, which with the increased MPR, investors are tilted towards the fixed income space, which is less volatile, and it's actually low risk. So for the equity markets closing in the red, it's just profit taking we see in some of the stocks. When we look at the activity level, it's quite varied. We saw the volume actually moderated while the value actually increased. So yesterday, it's just profit taking that occurred in the market on the likes of some high capitalized stocks.
Right, and of course, the tightening has definitely had an effect, like you mentioned there. But now, looking at sectoral performance, oil and gas is certainly the star of the show here, with a surge of 198 basis points. Which company stocks led those gains?
It's actually Seplat. So alone yesterday, Seplat actually posted a gain of over 200 naira in its share price to end at 5,271 naira per share. So when we look at Seplat year-to-date, it has done over 125% year-to-date in its price movement. And what has been driving this stock is actually the favorable oil price. As of yesterday, I know the crude oil per barrel ended above $77 per barrel. And Seplat is actually a stock that has been recording decent gains in terms of its bottom line performance. It's also a stock, I think the only stock on the NGX that actually gives dividends on a quarterly basis. So these coming together has actually helped in driving the positive sentiment we are seeing in the market. So yesterday, Seplat was actually the stocks that led the oil and gas index performance we saw yesterday.
Right, good for Seplat. Well, of course, the insurance sector is another high performer.
Yeah.
We saw a 10% increase there. What can we attribute this to?
So when we look at the insurance industry by and large, we've seen a lot of reforms, regulatory reforms in that space. Recently, we saw their reporting standard, financial reporting standard being reviewed from IFRS 4 to IFRS 17 to enhance more transparency and profitability. We've also seen in that space a lot of increased awareness as to insurance products and services, and this has actually driven the demand for the insurance industry, especially for the players in the likes of oil and gas and infrastructure, real estate. So there is increased awareness as to the insurance products and services. So for yesterday, we saw the likes of insurance stocks such as ICO, Coronation Insurance, that is WAPIC, Sunu Assurance Linkage, their share price actually appreciated yesterday, which actually led to the 10% gain we saw in the market space yesterday.
It's great to hear there's some response to the insurance sector in terms of sensitization and getting the move. We see that. But of course, the banking index sector, we saw a bit of the opposite there. They're struggling a bit, they're in the red. Which companies' stocks are dragging the banking sector over there?
Okay, for yesterday, we saw Zenith Bank. Profit taking is Zenith Bank, UBA, and also GITCO as well. Those are the stocks that actually led to the moderation that we saw in the banking index yesterday. But looking at the banking index on the NGX, so far in the year 2024, there has been a lot of struggle. And this is not far-fetched because, the ongoing market capitalization exercise, which is supposed to continue up to 2026. So there is still this a little shaky uncertainty on the part of investors on that stock. So there has been cautious trading going on the banking index for a while now. But by and large, we've known Nigerian banking industry to be quite resilient. So that has actually been helping. Year-to-date gain for the banking index, as of yesterday, was a little bit above 3%. It's quite lower compared to what the other indices on the NGX is actually doing. But we know that by the end this whole exercise of the market capitalization is done, it actually brings the banking industry to a level where they are able to compete globally with other competitors and also enhance their lending capacity to the real sector of the economy. So it's actually going to be, the moderation we are seeing is not going to be the type that is going to actually be a long term. It's just for investors trying to trade cautiously on the stocks of the banking shares.
That's refreshing to know. But moving away from equities now, let's look at the window for the October FG savings bond, which is still open but closes on Friday. What do you make of the rate offers here, given high inflation, of course?
Okay, for the FGN savings bond, it's actually an instrument that is issued by the Debt Management Office, DMO, on behalf of the federal government, and is being done on a monthly basis, specifically on the first week of every month, in which the next one is going to be by November. So for the rate that is actually being offered for the October, for the 2-year bond, we have it being offered at 17.08%, while that of 3-year bond is at 18.08% respectively. So for a conservative investor that is looking for a periodic return, because the coupon are actually given on a quarterly basis. So it's still, the rate currently is still reflective of the market rate, because for the past 7 months, starting from April, we've seen the rate for the FGN savings bond for the 2-year and the 3-year bond trading around the 17% and the 18% respectively. So it's quite reflective of the market rate. But when you compare it to what the inflation rate is doing, we know the return is actually, the real rate return is in the negative. But like I said, it's up to cushion the diminishing purchasing power that is brought about as a result of the inflationary pressure. So the rate is still quite reflective of the market's interest rate.
That's fair enough. I mean, if we look at the average yield on Nigerian treasury bills now, that's climbing. Yeah. Why is that the case?
Okay, for the Nigerian average TV climbing, it's actually a combination of factors, which I'm going to mention. To begin with is the inflationary pressure. Currently, we are at 32.15% as at the last results released by the MBS. So we've seen moderation in the inflation rate from July coming to August. However, we believe that this moderation is going to be very short-lived because of the recent PMS hike we saw in September. So for the results that we are expecting for the inflation report for September, we are going to see that moderation may not likely continue. So, and as such, for the just concluded MPC meeting, we saw the inflation rate actually being increased by 50 basis points. Cumulatively, we've seen 850 basis points so far in the year 2024. So as long as the monetary policy continues to tighten liquidity in the system, investors are going to look for a rate that is going to incentivize them to invest. And as such, the yield in that space is going to continue to trend upward. So for the rate, so we are going to likely to see this yield trending upward on the back of the tightening monetary policy, increased inflationary pressure, and another one is also government borrowing needs. There is this continuous government borrowing needs as governments come to the market to raise funds to cater for budget deficits and also another financial obligation. So for investors to feel the need to actually be able to come to the market space, they are going to look for a rate that is quite juicy enough to make them to invest. So that is what is actually contributing to the improved yield we've seen in the NCB space.
So it's mostly quite a reactionary environment as well, which makes a lot of business sense as well. But when should we expect the next T-bill auction?
The next T-bill auction is actually today because it's a fortnight event, so it's every 2 weeks.
So we're right
the last one was actually held in September 25. So today makes the 2 weeks for the next one. So and for the looking at the demand across the 91-day, 182-day, and 364-day, we've actually seen that demand has been very healthy. Like you said, the yield in that space has actually been very, very attractive. So looking at the combined demand from the investor, we've seen that subscription has actually overwhelmed what the government is actually planning to allocate to the market. And as such, from the last auction we saw for the 91-day, we saw the stop rate at 17% for the 91-day, 17.5% for the 182-day, and for the 364-day, we saw the yield above 20%. So for the auction that is going to take place today, we're also seeing demand to be also overwhelming because because of the increased interest rate. And as such, for our own prognosis is that for the 91-day, it's still going to be offered at about 17.5%. For the 182-day, we are looking at rates to still trend around 17.5 to 18%, while for the 364-day, we are looking at over 20% as well at the end of the auction for today.
All right, so this conversation is happening at the right time, hopefully. Well, fixed income markets, what's your outlook on that?
Okay, on fixed income markets, our outlook is actually going to be that of elevated yield. Okay. Because we still foresee that the inflationary pressure is going to persist to the end of the year. And as such, monetary policy, they are yet to rest on their oars on the tightening policy. So it's still going to be that of elevated yield for the rest of the year.
All right, Mami, we saw the Naira appreciate, strengthen 4.49%. What's led to this appreciation?
Okay, just yesterday we saw that appreciation, and CBN has actually been doing a lot in terms of trying to enhance liquidity in the forex market. And not forget that for October 1, we saw the government commencing the policy of Naira for Crude initiative, which has also helped in decreasing the demand on the forex to be able to procure refined petroleum products. And statistics has it that over 30 to 40% of our reserve is being used in petroleum products. So for the for Naira to Crude initiative, which has taken place, we'll see that the demand pressure on forex is actually going to temper, and as such, we are going to see the Naira strengthening. So that has actually been the results we saw in the market yesterday. And going forward to the rest of the year, we're actually going to likely see the appreciation in Naira for the rest of the 2024.
More appreciation in the Naira. Okay, that sounds like good news, right? But of course, depending on what side of the coin you're looking at it from, right, I bet?
Yes.
Right. All right, of course, we can't wrap this conversation up without me asking your outlook on currency markets as well.
Okay, for the currency market, like I said, it's still going to be, I know CBN is doing a lot, but we are still going to see that volatility. So for the appreciation that I said earlier, it's still going to be a combined effort on shoring up our revenue in terms of the oil revenue. And I know from the reports shown out by the MBS, we have seen that the oil sector has actually started, and there's rebounding going on in that oil sector, which is actually where a lot of our earnings come from. So should we be able to harness more revenue from Forex, it's going to trickle down into our reserve, which is going to help CBN to actually intervene in the Forex market when and where necessary. And as well, don't forget, remittance also attributes to the appreciation in our foreign reserve. So with the increased interest rate environment, the Nigerian environment become more attractive to FPIs. Yeah. So for them bringing out funding to the economy, it's also going to add to the reserve. And as such, the CBN will have that capacity to be able to defend the Naira when and when necessary. All
right, so everything is about being measured, pretty much. Busayo, I want to thank you. Very insightful conversation. As always, we should call you the pragmatic bearer of good news. Many thanks. I've been talking to Busayo Inuojo, who is investment research analyst at PSC Research Limited. Many thanks, and we'll see you again very soon.